Hello, guys. Welcome to today's program. Ronnie Rastan Gayab here again for you. And in today's market session, we want to look at some current analytics and also solve some trading challenges. So, please, if you are new to the program, just know that this program happens every day from Monday to Friday. And we have a morning session and an afternoon session, 2 hours morning, 2 hours in the afternoon. The goal is to actually analyze the market together, trade together, and create a comfortable atmosphere for many traders to learn and be able to grow in a higher height when it comes to trading. Please like, comment, invite others to join. Just give me 1 minute for me to invite more people to join the live before we kickstart. Like, share, and invite others to join us. The time I also invite other members of the community to join the program. Please like, share, invite others to join us. Like, share, invite others to join us. We are going to be starting this live immediately. We have 20 people connected. So just do well for your own advantage to like, share, comment, invite others to join massively so that we can start the program all together now. Share massively, guys. Share massively. Okay, I promise you I'm going to start the live immediately. We have 20 people connected. So we are about 18, oh, 20 already. So we can actually start the program. So like, share, invite others to join us. It's going to be an amazing turn today. And believe me, a lot of information is going to be shared, and one or two persons are going to be impacted during today's morning session. And the goal is to actually look for live trading opportunity and then see how we can actually get into trades live. So that is the goal of the program. That is the objective of the program. That is what we are fighting for. That is what we are struggling to build. And believe me, in the next couple of months, we'll be able to achieve this with you and thanks to you. So let's keep pushing, let's keep sharing the program massively and inviting others to join us because it's going to be an amazing thing. Okay, guys, I'll also be checking the comment section. If you have anything So good morning to you, EasyFX. Good morning, Claude. Good morning to you, Lawrence Thor. Good morning to Tienche. Good morning to Empire Forex. Good morning to everybody watching live all the way from Cameroon. Please let me know from which region of Cameroon you are watching us live from this morning. Let me know in the comment section from which region of Cameroon you are watching us live from this morning. Let me know in the comment section from which region of Cameroon you are watching us live from this morning. Please let me know from which region of Cameroon you are watching us live from this morning. Very important. Let us know from which region of Cameroon that you are watching us live from this morning. From Littoral, from Ela Hour, all the way from Douala, Littoral. Okay, thank you very much. Pilet, all the way from Dubai. I hope you are all part of the community and something massive will be happening in the days ahead. Hello, Pasi, all the way from Limbe. Nice having you on board this morning. Good morning, Ali. Lily White. Ali, nice having you this morning, Madam Lily. Good morning to you, Kimbi, Boris, all the way from Douala. Good morning, Angel. Good morning from Babaju. That is Davin from Babaju. Good morning to you. Good morning, Samsung. Good morning, Luis Figo, watching all the way from Limbe. Nice meeting all of you all this morning right here on the platform. It's a great opportunity for me to always share what I know and how you can actually benefit from this is what is crucial this morning. So without wasting much of your time, we are going to be kickstarting our program today. We have approximately 2 hours together. Without just analyzing the market, we will look for trading opportunities together. And from tomorrow, we are going to be using the XNext platform so that we can actually execute trades during our live sessions and then hold that trade, see how it goes, and all of that. So it is very crucial because during some live opportunity like this, we might have the opportunity to have some live trades. We might have the opportunity to have some trade set up, meet our target, and we will be forced to actually take it all together. So there is nothing to worry about. So we are starting this morning with the very first pair before we look into solving problems or traders' problem. Do well to belong to the Bell Forex community. It's a great place for you to be. It's a massive place for you to be. It's an amazing place for you to be. All is going to be fine. No matter the challenges you're facing as a Forex trader, we are here for you. We are here to assist you. We are here to guide you. We are here to give you even more better than what you think. So let's go straight to on our chart. And the first pair that I'll be looking at this morning is gold. Gold, because I noticed that during the evening session yesterday, gold was the preference of many people. Many people were commenting gold, gold. They wanted to trade gold. They love gold. They want to be with gold. Oh, I get it. So I understand that many people want to actually trade gold at the end of the day, and they would like us to always start from there and give them a head up at the end of the day. So please, I will be going on to check on the gold chart, and something massive could be on our way today. So gold is actually there, and we did some analytics yesterday. We had some point of view touch and all of that. So we are going to go back to the basics that goals carry, and then we'll look for so guys, we are going to be going straight to to the goal chart, and then we look at what goal is having. We are going to be very much tactical, and we will have to consider the trend when it comes to goal. So when I look at the goal on the bigger picture, I would like to consider the chart that we have been having from the month of May. So we're in August. So we have the month of May, June, July, and this is August. So for the past 4 months, Gold has been consolidating between these two structures. We have this low, we have that lower structure, and we have this resistance area where gold has been consolidating upon. So these are the two key levels where gold has been consolidating upon since the beginning of um that was from the beginning of May. Now we have an internal support structure and also have an external support structure that goes right down here. So in a longer picture or in a bigger picture, there is a great opportunity that gold, after reacting low and high, gold will end up reacting down here. Now, if this is true, then the internal support structure on gold will serve as a great zone for high liquidity. So definitely this zone will serve as a great zone for a lot of market liquidity. It means that there is a great opportunity for gold to clear liquidity because a lot of people keep executing a buy on gold whenever gold comes up to this structure. This is clear, and I believe that a lot of you can see that there will be a great trade opportunity right here on gold. If gold happens to sell, it will clear this liquidity that is lying here. So that is a bigger picture on the gold chart, how gold has been consolidating, and this gold has been consolidating from the month of April 2025 till date. Gold targets highs and targets lows. In our last market movement, that was from the month of July 2022, 22 of July, market left from the this major resistance down to the middle resistance or the internal, sorry, down to the middle support. And we saw the market trying to rally again from this major support up. When a consolidation trading tactic is being concerned, we actually need to apply the method that goes with consolidation. Once we trade a consolidation market, we assume buying at the lower support structure and also we assume selling at the higher resistance. We buy from the support structure and we look for sell opportunity on this resistance. We buy from the support structure and we look for buy opportunity from this area. So, in a little more explained terminology, this is one of the best way I could look at trading a consolidative market or looking for a setup in this consolidative market structure. That is what I can be looking at as far as gold is concerned, because that is a framework, that is a market framework that gold is utilizing to move at the moment. And in that sense, it will be more likely for me to look for an opportunity that correlates what I am having. The middle of a consolidation is most often referred to as the no-go zone. The middle of the consolidation is always mostly referred to as the no-go zone. This middle of this consolidation can be referred as a no-go zone because a lot of manipulation can occur within this middle. People struggling to sell or buy the market from this middle have a chance of being caught inside the trade. And you see that the best point for you to buy gold was back here on the 25th of July. Anybody that took a buy on gold on the 25th of July, when it with a minimal risk as possible, and definitely should be holding good profit today. Now, in this regard, I know a lot of people are struggling to sell gold. I saw some people selling gold because at the moment, on the short term base, I'm going to say that based on the directional bias, gold is probably moving to the upside. We are going to go beyond this because I understand that different people have different analytical methods and they could probably be looking for different point of sales and all of that. Assuming so well that gold perhaps may have moved from this lower structure here to the upside. I'll be looking for a way. In fact, the background of my chart seems to be dull, so I'm going to give it an immaculate white. Already we are on immaculate white. We are white, but why is it that my eyes are not seeing well? Mm. Are you able to see the chart properly? I think here is better like that, right? The reflection has reduced. So I think from here, people can see better. The lightning is not that brute. It's not that brute. It's not that harsh. And I think a lot of people will be able to see the chart even more better. So I think this is better for us to, so people will be able to see exactly. So, but I'll have to increase the wicks of my candles. So these wicks, candle wicks, the intensity of the color is at 100. Oh, red color is at 100. Borders all at 100. I see. Anyway, we get there. So I know that a lot of people are going to use a trend line method on gold. Some people are going to use their trend line method from this end, and I may be pulling it right up to this. If you use this trend line that I just drew right now on gold, your trend line is valid. And recently, with this particular trend line, we saw the way the market reacted at some levels. The market reacted here, the market reacted here again, and the market reacted at this price level. So we have had three key points where the market actually reacted on gold, and then a confluence was created. A confluence is two technical factors meeting together. So right here, we had a resistance line, and at the same time, we also had a trend line that meets here to form a confluence. You see on live. You see on live. So we had these two technical factors meeting here and creating a perfect sense of market directions, as you can see here. So it's a great look for the market here, and we'll be looking at this trend line because it actually matched up the consolidative analytic approach. So it was very much easier for us to use this trend line here. But if we also come here to take this trend line, because there's an internal trend line here, this is an internal trend line. So if we were to use this internal trend line without considering this O1, so let's just keep this O1 at a blurry stage, right? Let's give it a blurry stage. So let's say we blur it like that. Let's just blur this trend line. We keep this one aside. I just want you guys to see something. We keep that one aside. So let's assume that you were given an opportunity to analyze this market, and the tool you saw was this trend line. If I were to look at this market at a broader data perspective, this market here is not trending, so this trend line might not be very useful. Because if you look from this end here, if we are to split this chart from here, let's say we split this chart from here like this, and we get this portion also here, it is clear to us that the market is more likely to assume a consolidative market. So if we can consider this a consolidative market, then this trend line is much more likely to be a trap, and liquidity should be lying above the trend line. So we should see some liquidity lying above here that can be grabbed by price at any time. This is something we should consider. That could be grabbed at price by price at any time. So to me, if I were to actually get a trade on gold today, I'm going to consider that trend line because it is very important to have much data on your chart. So we are going to, me, I would say that I'm much more bullish on gold, and this trend line can just be a much trap on the gold chart. Different traders have different opinion, but my best opinion will be that I cannot go for a sell on gold as we speak. Now, breaking down the analytics on a smaller picture and considering the previous trend, even if you are to consider the previous trend as a point where you are going to look for a trade entry. It is true that you could use the past trend to get a sell opportunity on gold. But the question is, based on the framework analytical approach, the market direction and the price action carries more of the weight. That is exactly what the trigger that my help me to be able to get a sell opportunity on the gold. So and so considering those framework is a plus in the way you see the market. And by so doing, I understand that a lot of people are going to go to the smaller time frame and they might see some point of interests or whatever. As in the case of this trend line that I gave, I will still just draw the trend line and keep it as a dotted. And this trend line has been the reason why gold price was held from this price level in the past few days. But to me, based on analytical approach, this particular trend line won't be a method for me to execute, considering the fact that this market can actually break above the structure. You get it? So I will actually also see there was also another block because I'm actually working on what a lot of people are seeing too because there was much more like a baseline structure here that form a thin level where the market is actually reacting currently. So a lot of people also sold because of what they saw here, but these price actions are not being seen on higher time frames. So this is what a lot of people also saw yesterday, and they were struggling to sell the market. And above there was a coil. This coil was here. This coil is more powerful, but the volume break out of that coil was not that massive at the end of the day. So we also had this coil that would have served as an interference to price rallying to the upside. Nevertheless, I will remain bullish on gold, considering the fact of my analytics and my method of analytics. A lot of people could be taking a sell on gold at the moment based on what they are seeing. But based on my framework of analytics, I remain bullish on this concept. In that regard, I'll be able to generate a trigger that might help me to be able to get a sell opportunity or see if the market is going to get a confirmational sell. And if I'm to do that, going to a smaller time frame is going to be a great tool for me. For example, on a smaller time frame, I can take a trend line like what you are seeing here. This trend line is very valid, taking into consideration that it has touches 1, 2, 3, 4, 5 points on this chart. Above that, I'm also going to have an upper trend line that will help to form like a triangle. So this is what I get at the end of the day, this triangle. This triangle is very valid and can help us to actually get where the gold price, is going to go to in the longer run. We have two options with one having more weight. The first one having most of the weight is a bullish direction. Gold breaking off the structure and having a retest is a good buy opportunity. That is a wonderful trigger. Gold breaking down here and doing a retest that changes trend could also be a sell opportunity. But in my two opportunities, the up direction carries more of the weight. That is exactly what the triggers that I could be waiting on the gold part of things. But maybe before the afternoon session, we would have a proper involvement of price and we could be looking further to do even more better. So please let me know in the comment section what you think about the goal analytics. It was a wonderful one. So let me know in the comment section what you think about goal analysis. Thank you for all those watching all the way from South Africa. We have like 3 people watching all the way from South Africa, Nigeria, and other parts of Africa. That is good. It's a great one. So let me know in the comment section what you think about the goal analytics. And from there, I will be solving one trader problems. So if you have a problem, please also drop down in the comment section for us to look at it. Okay, Sama all the way from Limbe. I'm expecting gold to sell at 333.7. Let me check what you're saying. Please, I always love to get your contributions. It's a great one. We're interacting, you understand? So we are interacting, and it will help a lot of people not just to be there, but to actually partake in the real deal. So you're expecting gold to sell at, let me see from what you're saying, 333.79. 33.79. Okay, he's expecting gold to sell at 33.79. So that is definitely his expectations are basically focused on the fact that we have on the fact that the market will meet the upper trend line. That's it, right? So another person is looking forward to have the market goes back to this structure, then mitigating here to sell. Um, that would be a good short-term trade because a lot of pips. If that happens, then it's also a good idea selling the market somewhere around there. Now, even though the market seems like wanting to sell here like that, you have to be very careful. You don't trade at random. You trade on key levels. You don't just trade because you have to trade. So this is also good. It can give you a short-term trade. That's contribution is beautiful. That's a beautiful contribution. So so there is this funny people. I don't know from which part of the world they are coming from. They're just sending links here. So that's it. So looking at trader issues, I want to check the comment section if there is any person having a problem that you want us to actually um, tackle. Then drop your problem down in the comment section and then we'll work on that. So if you have an issue, yeah, it's still a bullish run, Christian. I still believe the market is still in a bullish run. That's right. Let me know in the comment section if you have a problem that you want us to address so we work on that. You're welcome, Lawrence. So, no big problem from anybody this GJ. Exactly. Great contributions. So, we are going to be picking up GJ, GBP Japanese yen. I'm picking something absolutely nobody can think I should be doing that. I know everybody will know, oh, we are going to the DXY, but we're not taking DXY now. Let's go on something different. GBP Japanese yen. GBP Japanese yen on the radar. So here we are with GJ, and we're gonna look on the weekly time frame first. Starting GJ from the weekly time frame is crucial. So here we are with GJ. On the weekly time frame, why the weekly time frame? Because I want to get the major market direction. So here we go. Mm, GJ. The first thing I want to get is I want to get the framework of the market. So GJ for the past how many months? We can count for ourselves. Since August, since the month of July 2024, GJ has been consolidating zero trend. This gives us an idea of which framework we can choose to use in analyzing this market. So, with what I'm getting here now, GJ is more consolidation. And in that regard, approach to analyze the market because he a clue on what I should do, identify market directions, and all whatnot. So it's crucial for me to consider that price levels. So let's see what we get. So here we have the low and high of our consolidation based on the monthly time frame. We've pushed down to a smaller picture. How you guys are seeing? We have been moving up and down, up and down. So we rally here, we move here, we move here, so we move here. So GJ to me is bearish. True or false? What's your take on the trend of GJ? Are we going down or are we going up? Considering the 1 year trend. Directional order flow is to the downside. When the candles are going to the downside, it is faster than when the candles are going to the upside. So could that be a huge opportunity for us to make money on a GJ sell? I think yes, it should be. It should be a great opportunity for us to make money on GJ sell. Okay, that's down. A lot of people are saying down, or a lot of people are saying down. It makes sense. It is a great possibility we're going to the downside. That is very, 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 very certain. We are going to be flying to the downside. So on GJ, what is the next thing I can do? It's clear on GJ that a trend line can be used to get market direction. Oh, money. Eh, eh. people were blowing accounts. This was a soupy opportunity. They call this soupy opportunity. A perfect break and retest on the trend line. Soupy opportunity. What a break and retest. This setup occurred, that was on Friday. Friday. We are still very much fresh into it all. So we are bearish on GJ. And the trend has changed completely. So if you are listening to me today and you are looking for buy opportunity on GJ, that means you don't like your trading account now. It means you want to lose money. And so you are not here to lose your money. We need to learn, put in practice what we are learning, improve on our analytics, and do better. So, to me, I'll be looking for a sell opportunity on GJ, and the sell trend on GJ is now what they call my trend of interest. So I'll be doing a lot of analytics here to get an entry on GJ, and I can now blur off my trend line. One, I can blur off this trend line, give you a less visible outcome. Two, I'll give this red zone a less visible outcome. Three, I maintain my stand here and I try to analyze the market using different market techniques, because now GJ is trending to the downside. So I'm going to use a trend trading technique. And in this regard, we are going to have here a higher structure. This is where the market started selling, right? So we have here a lower structure. This market moved from this low. Straight up here. The market wick silently off the low and created a new high, a new structure here. Now, doing structural mapping, this could seem complicated because a lot of people might look at this as a break. The candle didn't settle above the line, so that is not the full break. So we can still reconsider this level. So we can say this, and then we can consider again the same level for an extension for a further price structure. So you can do this. At the end of the day, we are going to end up with one impulse where we are waiting for a correction. So this is the impulse, the last impulse the market got. So now what are we doing here now? We are now waiting for a correction after this impulse was created. So we are on a 4 hours chart. That's our chart, and we are going to be picking up a POI from this impulsive movement. We've already had a break and retest of our trend line. So all what we are just looking forward here is either we get a continuation pattern or we have a reversal pattern. So now that everybody can see the impulsive wave, now there are two things. One, because we look at POI from bigger picture, right? So we are going from a bigger picture down. So let's say on the 6 hours chart, all what we can see on the 6 hours chart is an entire fair value gap, very huge and dynamic fair value gap. So we can consider all of this zone. We go to the 4 hours chart and we go to the 3 hours chart. On the 3 hours chart, our fair value gap can be refined to this structure. We go to the 2 hours chart, 3 hours chart, to a 30-minute chart, and now in our entire zone, there is a volume accumulative area, because don't forget that. In fact, hold on. I'm going to go back to the 6 hours, and I maintain the entire fair value gap, which is very crucial to this market. So when we move down to the 3 hours chart, we have a refinement of the fair value gap, which is here. We maintain the zone, and then we move down again to another smaller picture, which is the 30-minute time frame, and then we have a basic structure that also comes inside the bigger picture. There is something we can do here. We can bring up the volume tool. So let's say we bring up volume profile. So we get the volume profile tool, and we try to implement the volume profile tool between this fair value gap. So we see exactly where most of the volume peak were injected. So after putting up our volume profile, you now see that there was a huge volume at this spike. And then this fair value gap did not get volume that much. You get it now. But the volume spike was mostly on this consolidation. So it tapped inside this consolidation is very important. So I'm going to take now the second zone that we had from that consolidation very much slightly serious. So I will name it, let's just say we put it, we give it this value. Even though this entire zone is where the market is going to mitigate in, but the volume profile gives me a more reliable zone where most of the proper action could take place. I get in it. So it gives me a more probable zone. So that makes sense. And also Fibonacci can also be used in this sense. So we've used volume profile. I'm going to increase the chart a bit so that everybody can see. So that's it. That's fine. I think everybody's saying it. So I'll be able to also use this thing Fibonacci. So Fibonacci will come from the beginning of that particular impulse down to the end of the impulse. And now you guys are seeing that the the base is falling between 61% and 78% Fibonacci with a volume spike or a volume hawk right here at the second point of interest. This gives me an additional confluence on this price information, and I can now consider the best point to sell my market. So if I'm to look for a sell opportunity, then I should be able to have here, then the market sells. That is the first thing I'm looking. If at all a pullback is generated on GBP Japanese yen, that is the first trigger. And the second trigger will be much of a continuation pattern. So I'm going to keep the first trigger, then I'll just give it a dotted line, let it remain there for now. Then I'm going to work my way throughout a second trigger. And a second trigger is going to be amazing. I think you will love what I want to do. So the second trigger is based on a continuation motive. So what do I mean by a continuation motive? Based on what we are seeing here, it is very factor to say that this market is going to form a consolidative zone around this price level. And if this everything being equal, there is a great chance that another setup can be created on this market if we have this consolidation holding to a possibility. A break to the downside and a retest of the zone will be a massive sellout without a necessary pullback. So on GJ, we are bearish and we have two triggers on our mind. So that is the two best triggers I can actually provide when it comes to GJ. Let me know in the comment section what you think about this. What is your take? What do you think about the GJ analytics? So if you have anything, that is the best triggers on GJ. We have a pullback trigger and we have a continuation trigger. So let me know in the comment section what you think. Okay. You're talking about the directional flow. Are you talking about that the base that can be created at the second trigger will not be mitigated? Is that what you're saying? That's for Gaspar. Just for Gaspar. So your worry is on goal. That's okay. Second possibility explains my worry. Okay, good. Second possibility explains your worry. That's good. It was a good one. And for the first trigger, following the fair value gap created previously by the market bullish before it sells. So Christian is for the first trigger. That makes sense. The first trigger, that's the and because the first trigger also has a volume this thing in a very strong volume a strong volume this thing mark. Let me see for the volume profile. For the volume profile, let me see for the volume profile. Let me see if you can see the same. Okay, for the volume profile, the center of volume is right up here. For the volume profile, the center of volume is right up here, where on the first trigger, right? So you see, as I've been able to put the volume profile, and have really extended each other. We can see the center of volume execution on the volume profile. You can see the POC. The POC for the volume profile is right up here. So if the first trigger goes up, then that will be a best shot for us, like a good one for us. So the second trigger explains a consolidative approach, while the first one goes to this thing. But now we cannot talk about GJ without talking about the the JPY basket. I think that it will be fundamental for us to check the JPY basket and the JPY basket and give us a clue if we are going to have the consolidative trigger or pullback trigger. I think it will be a good one for us to look at the JPY basket. I think Okay, the complete. Okay, let's see but let's check the JPY basket. You can have a better clue on the JPY basket. So JPY basket. So the JPY basket is like the dollar index, but for the Japanese yen, it gives us a clue of what is going to be happening. JPY basket. So we can see the same consolidation for the JPY basket. This is these are our strong levels. All you guys can see. So we have these, and on JPY basket, we are definitely seeing a bullish JPY basket. And since we are seeing a bullish JPY basket, we're also in return seeing a bearish GJ, because a strong JPY is going to give a weak pair of GBP Japanese yen. So based on the JPY basket, it's possible we take a sell-off. Yeah, we're on the we are there. So on the dollar index, on the GJ basket, I saw a trend line. Please, this trend line, because we need to always look at market structure. This trend line goes thus. I'm not refusing. We are going to work on that trend line because I don't cheat. Oh, I make sure I draw it the way it was supposed to be drawn. So this is it. The most touch zones. So if you look at this very well, you guys are going to see that the JPY basket has been consolidating since the month of July 2024, right? And then and then what I can see here is that the market break this trend line slightly recently. Going down to the 12 hours chart, you can see for yourself now. Price was held around that structure. And so the Japanese yen basket or the yen basket shows a clear break above the trend line. Are you saying? So what we can be looking forward today is a retest, and I can see the falling tree method. The falling tree method is a continuation pattern. The falling tree method on the 4 hours chart of the Japanese yen basket. This falling tree method is the continuation pattern. So it is evident that GJ basket can pull back a little bit, giving us an idea that the first trigger on GJ can be valid. I see. And we have a very strong bullish engulfing pattern here that is lining up as a POI to create a confluence in this market. Is it? So it's a strong bullish order block that is lining up to create a confluence at this price level. So you can see that a fall of this market to this price level is going to give us a good setup, and also is going to bring forward a break and retest. So meaning that GJ can get the first trigger as we were first of us talking about. So the first trigger can be very, very possible. And again, moving down to to a smaller time frame to look at what's going on, we might be able to get a clue on the first thing, on the first option. We had a base of this consolidation here. This on a smaller picture. I will have the height of this consolidation. Don't be shocked to see that GJ, even though we are expecting that the pullback should occur, don't also be shocked because there is a possibility of that the second trigger is also being seen. As you can see here, that's the first trigger reflection on the Japanese yen basket, right? And also the second trigger reflection can also be seen. So all of us have seen, we are all seeing the options of the GJ basket getting bearish because of what we are seeing here. All of us have seen that, and what we are going to be doing here is simple. Mm, let's see. Let's see where volume was injected here. Let's use a volume profile. How you guys are seeing for yourself that the center of volume execution is right down. So a bearish GJ is expected. You guys are seeing a bearish GJ is expected. A bullish GJ for a pullback for the first trigger is expected. So with this analytics on the GJ, the JPY basket, what's your contribution about this, please? Let me know. Alphonse, are you talking about the yarn basket, or you are talking about what? Okay, you are saying that the basket, I don't know, from the overall analytics we just did, right? It is clear to us that uh, the market is bullish for the JPY basket based on the consolidation. We are looking for a point of interest on this regard. And looking at all we have, uh, a break and retest on the trend line can be possible. And if this is invalid, then further investigation can still be done. But as I've said, we are also measuring where most of the volume was were entered. So, and some people are saying that the trend line can be used for liquidity. You can grab liquidity below the trend line. It's true. The market can fall and then grab liquidity slightly below the trend line, then rally. The trade idea, in fact, we are going to get to the explanation of the trade idea, becoming a setup and becoming a trade, is a whole process. So for GJ, I'm not buying GJ. You get it? I'm not buying GJ because to me, I consider that a buy on GJ is a pullback. Eh? I'm looking for a sell opportunity on GJ, and I've given you my possible price levels and reason why I'm looking at those price levels. So that's it for GJ, and that's it for the JPY basket. Yes, GJ is bearish. I'm not refusing that fact, Romeo. GJ is bearish. That's what our analytics prevailed. That GJ is bearish. GJ is bearish. So we now had two triggers to look for a continuation. We had the first trigger on GJ, which would be a pullback to the POI that you are seeing and to the volume for PCO, POC, to the volume piece POC, and also a pullback to the point of interest. That's making the first trigger. The second one was a consolidated break trigger that we gave the two options on GJ. We are not buying GJ. We know GJ is bearish, and the yarn basket is bullish. But we are anticipating a pullback on the Japanese yen basket. And if the pullback occurs on the Japanese yen basket, then there should be a pullback also on GJ in response to that. How are we getting now? Fundamental on GBP is will be more of a catalyst to the price action that we are seeing. It can be more of a catalyst to the price action that we are seeing. But Christian, you can check the JPY basket on TradingView. Can check it on TradingView. So let me know from the comment section what you think. And furthermore, we are going to be trading. We are going to be treating traders challenge. All what concerns the US dollars will be handled during the US session. So drop in the comment section if you have a problem about risk management, anything that you think that can be an important topic for us to discuss about, that can be of great help to you. Do not hesitate to drop that in the comment section and we'll look at it together. So if that is the case, then setup two on GJ is likely to happen. Yes, that's the real Fabrice. That's it. Okay. For Gaspar, he wants to know more about candle range, and I don't know uh, what you want us to treat about candle range. Do you want us to talk about the theorem of candle range or a strategy of candle range? Because candle range is a broad topic. Clinton says, so please, I do not understand why when I analyze the market and I don't take the trade, the market will go my way. But still, using the same strategy while taking a trade, the market goes against me. Please, okay. Another question is, please, sir, when you started trading live account, how were you managing your running trade? So we have two major things to handle. And based on Trader Challenge, we are going to always create a video afterwards on your Trader Challenge to make it even more effective. Like we are going to do two videos after this. One will be talking about um, Mr. So Joseph, you already asked about two questions, so I'll go in the order of that, and then we handle what you've asked already. So, so let's go to the question. So it goes thus. Clinton says that uh, so please. So that is called mindset, because you think that when you analyze the market and you don't trade, the market goes in your direction. But when you analyze the market and trade, the market goes against you. Now, there is something that has to do with with fear. Fear is what? First of all, let me tell you something. There is no way you are going to have 100% trade all the time. Let's say that you take uh, five trades, you get it. After taking five trades, you might win three trades, and then you might lose two trades. So it may happen that after analyzing the market, the trade that you were supposed to lose, that's what you took, because it shows that you did not take all the trade. And win or lost in forex is not determined by a single execution. Winning in forex or losing in forex is not determined by a single execution. It is actually a win when we talk about winning in forex. It's after executing a number of trades. When we talk about lost in forex, it's after executing a number of trades. So if you can take most of your trades, because you cannot win all the trade, and now you need to keep away fear, so you'll be able to trade off most often, consistently, and you will notice that you make more wins than lost. So there is a question of consistency. There is also a question of fear, the fear to lose, makes you to stay out of trade. And now, there is no way, if you put in consistency in your execution, you will definitely see a result. So there is no way you can fail if you put in the work. As per strategy is concerned, no strategy is 100% perfect. I myself, I take trades, sometimes it goes against me. So you just need to make sure you implement the rules of trigger. Idea becomes setup. Setup becomes a trade. A trade gives an opportunity. Keep that in mind. Execute most often. Manage your risk. And definitely keep away fear. And your problem is definitely going to be resolved. Now, going to Joseph querying what Joseph asked. Joseph said, we are going to be working on Euro USD, GU, and other stuff during the US session live. Joseph said, please, sir, when you start trading live account, how were you managing your running trade? So Joseph want to understand, when I started trading a live account, how was I managing my trade? When I started trading live account, it was challenging at the very beginning to manage the trade, taking into consideration that I would take trade at random. So managing your trade must actually be done by respecting the rules of your execution. That stipulates clearly. You will enter a trade after another. You don't add a trade on a losing trade. You don't add a trade on a trade if the trade is not already in profit. So managing your trade must go with the set of running trades you should be holding, a set of how much you should be losing. Because if you have a $500 account, you can say, okay, in this trade, I'm placing a trade, I'm willing to lose $10 from this $100. And this $10 will be split into two trades. And then you calculate the number of stop loss that is worth $5 per trade. And you just have to hold the two trades because that's what your rules stipulate. Unless you close that two trades, you are not going to execute another trade. So trade management must be done through strict rules. It is not by judgmental analytics, but by principles. How many percent of your account are you willing to lose? How many percent, how much stop loss are you willing to lose? You must be able to answer this question before you execute a trade. I have a $500. What is my drawdown limit for today? What the prop firm does. One of the major things the prop firm does is the prop firm will set rules, multiple rules that the trader must use to be able to manage their account. Once the traders are unable to respect those rules, they face the challenges and they lose their money. So you as a trader, what is your daily drawdown? I have $100. My daily drawdown is $30. Then I'll be able to know that, okay, I'm not going to execute a certain number of trades that will take off these $30 just easily. How many trades are supposed to take off my $30? You must stick to those rules, and your trade management without emotions is going to work. You don't emotionally manage your trade, or because the trade is going against you, that's why you want to close. If the trade goes against me, as long as the trade has not touched my stop loss, I'm not closing my trade because that's not being emotional. It's being based by principles. I'm not adding a trade on a losing trade, for example. So it took me a lot of time to be able to manage my trade confidently while respecting the rules of the game and knowing exactly what to do and what time to do it. So if you truly want to grow as a forex trader, your trade management must be done by strict principles and guidelines. not just managing at random. So I think that will be able to help you think a little bit more on the subject. So Joseph, I think your question has been answered, believing that you are going to handle your trade even more better in the days ahead. So guys, I think that this morning session has been a great one, and we are going to be meeting again during the afternoon session from 1 p.m., where we are going to be looking at the US pairs, the US dollars index, Euro USD, GBP USD, gold, and I believe we should be having trade opportunity during that period. It's a wonderful one together. Thank you for always being there, guys. I really love the way you guys do it. If I have not been able to answer your question, the next session is coming up and we can work on that together. Have a great day. Bye bye, everyone.